All right, what is going on, Discord and YouTube family, and welcome back to another edition of Market Review with me, T. Hobbs. Today on the channel, we're going to be reviewing the Dow Jones E-mini futures, the S&P 500, as well as the NASDAQ, and taking a look at the volatility index to kind of support the pieces of how I was viewing price today. Just a quick summary of my trading day. I did not take any trades inside of the New York session, mainly because I was basically content with the trade that I took on gold last night. So I did take a short on gold at the highs. Had one of my best trades on gold ever. I got locked in 70 points on the majority of the move, and runners got stopped out for 60 points. So it's a damn good trade. And I honestly just didn't really have the fortitude to kind of push through and trade the New York AM session, especially where price was at. I knew there was an opportunity to go long. I just honestly just didn't want to. So I will go down and break down my my breakdown on the market today and go over my pre-market plan. I am back trading the Dow Jones. I split between these three instruments pretty often. I would say, like, I fall in love with the S&P for a while. Then I'll be like, nah, I don't like you. I'll go back to the Dow Jones. Then I'll be like, yeah, no, I'm not trading the NASDAQ at all. So I just kind of flip between these two right here. So I use the NASDAQ as kind of a guide on what tech is doing. I don't necessarily trade it unless I got my heart monitor on. But anyway, let's break down the Dow Jones plan, and I'll walk you through kind of what I was seeing. And we'll always start in the morning. We start with the daily candle. So if you guys are available in the mornings, I'm usually in here 5:30 Central, 6:30 a.m. Looking at the market, probably in a trade from London or something like that. But in addition to writing my pre-market plan prior to the market opening, about 15 minutes prior, I like to give my full analysis, like now that I have that 90-minute cycle of price, right? And sometimes it doesn't necessarily contradict what I'm saying in the pre-market plan, but sometimes I see added things that I didn't add to the pre-market plan. So if you're interested in that, make sure you get in here early, and I can walk you through the how I'm viewing price. But anyway, the first thing I saw was this big candle right here from Tuesday or Wednesday, April 9th. This is when the market moved 10% on, I call this the Trump tweet candle, right? Like, he was like, hey, this is a good time to buy the market. And then the market moved up 10%. I don't know how that's not market manipulation. That's a totally different story. But we were, as long as this candle was intact, this candle broke, it broke above three highs, right? So I'd say that that's a change in character, right? Now, it's only a change in character if the market can come down here and retest it, right? So as we were consolidating at these highs, we talked about this being a bull flag. The market broke to the downside of the flag, which would trap the other participants, right? Manipulate down to expand up. The second we had all that selling yesterday, it was just enough to manipulate the swing traders to go short, right? And if they didn't get out yesterday, by the time they woke up this morning, they were already underwater, right? Because the market already rallied back up to their entry points, right? So when we saw this, we looked at this area. I talked about, hey, this is a great area. We're in major discount, like major discount. We go to the weekly, you go to the monthly, you can see we're at the low. Like, this is where you want to look to buy the market if it gives you a reason to buy, right? So once we understood that, we went down to the 4 hour, and I brought all of my drawings back out, and I went over my pre-market plan, right? Now, I know it looks like a bunch of clutter, but it's controlled chaos inside of here. Everything that I have on my chart, I use, right? So I would never, ever entertain someone telling me to take some of it down. So anyway, we had this 4 hour demand zone here, right? We had this 1 hour resistance zone, which I anticipated kind of turning into support, really, but I always place it there just to see what price is going to do there, right? I'll gauge sellers in this area. And then we had the end wall here, right? These were the three levels that I thought price would interact with. If we came back down, we could interact with the range. We could interact with the bullish 8 hour demand zone that was down here. I wrote it as a 4 hour. It's about the same thing, right? But the market never really came down here because it really didn't have a reason. And I'll get into that as I review price. But let's start with the gray box, which is my macro. So we were in a bullish retracement of a bearish trend. And I mentioned this in the pre-market prep, right? Whenever I write this, that does not mean that we're completely bearish or completely bullish. I'm giving you the context of the market. Essentially, from these two lows, right? Everything inside of these lows is bullish. So every time the market comes down here, you should be looking to get longs until this low breaks. Everything up here is bearish, but it's not a validated high, right? I'm gonna repeat that. Everything up here is bearish, but these highs are not validated, which means that they're technically just bullish highs, right? Intermediate highs. They're not validated because they haven't brought a new low to the market, right? They've only just set up here and played, hooky for a little bit. They're bears, they're bulls disguising themselves as bears, essentially. You can just tell by the wicks. Look how they're buying up, buying up, buying up. And then we drop down aggressively yesterday and we don't take out the lows. That is a clear-cut sign when you're in aggressive discount, right? That the market is trying to retrace back to the upside, okay? So that was my conditions. We were bearish as long as we stayed below 39,053, right? Which was basically yesterday's high. And you can see we got above that. So that's why we continue to be bullish, right? We had to make a new high. We were bullish as long as we stayed above 37,998, which was yesterday's low. So we made a higher low and then we got above the previous day high. That means we made a higher high. What are we? Right? Like, we're definitely not bearish. I'll tell you that much. I said in the macro, bears were dominant yesterday, but in bold capital letters, I wrote in the plan, did not take out the low, right? Because that's important. And then I referenced the EMAs because I use these when I'm looking at price throughout the day or especially in the pre-market. I said we are below the 9 EMA and the 200 EMA on the daily, okay? And on the weekly. We bounced off the 200 EMA again. I should have put that in all caps too, because this was important, right? Like, this sentence right here was the reason why I was extremely bearish, like one of them, right? I said today will be critical for bulls to make new highs or the bears will be coming back down to finish the job. You can see ultimately the bulls made a new high. Therefore, we are continuing to be bullish, okay? We make a new high and we accept that high, we damn sure ain't bearish, okay? So, as I said in the plan, let's go back and look and see how the plan worked out. Now, I stopped using macro time in a sense of the indicator. Like, I don't have all of those boxes that I normally have indicating the time. It just became a distraction for me, right? Once I understood macros, I felt like that macro indicator was a training wheel for me. And now that I understand it, the only thing I really need from that indicator is these 3 levels here, right? Like, so I just completely turned those off. That's a little update I made, right? But anyway, we had the daily fib sitting here, right? And from the daily fib, we can denounce that, well, not from it, below the daily fib, we can denounce that London session or the Asia session opened up here. At the top of our chessboard, we had tight consolidation. Anytime I see this tight consolidation, I always tell people we're about to get a big move, right? And it's probably not going to be to the downside. One, we're in heavy discount, right? And we're consolidating at the close of the PM session. We gapped up, I believe, and then came back down and filled that gap. And then we pushed up aggressively. Right there, it was over with. Like, at that point, I knew we probably wasn't coming back down here, right? So then we consolidated. And anytime you see this consolidation from midnight to about 1:30, which is usually like the pre-market for the London session, anytime you see this tight consolidation like that just means that, sellers aren't really interested in taking price lower, right? Bulls are building value right here. It essentially creates a demand zone, right? So we created this demand zone, I think from 11:45 to 1:45. So probably like a 2-hour or 3-hour, something like that, demand zone. And then we rallied above it. We got above the high again. And from there, we came back down to the highs and held the highs again. Then we broke the highs, right, at 08, 8:30. And then right here was market open, 9:30 candle, traded down into 930. This was a go gadget push, right? And most people were getting smoked right here, right? And what I use this for is if we rally into it and we instantly failed, because you never know how price is going to be delivered, right? Like if we rally into this and we instantly fail, by all means, I'm definitely looking to take this trade, right? On a retest, right? Failure, break a structure, retest. We didn't get that. So I was live streaming and I was not live streaming. I was live trading in the Discord, and people were asking me like, are you looking to go short? Like, are you still looking to go short? I'm like, I'm not going to short it until I see the reason to go short, right? So none of these candles gave you a reason to go short. I mean, you come down to the 1 minute and you can see where people would get faked out, right? Like, because as soon as the market opened, it gave you like this little juke candle right at 930. People got caught up in this trying to go short. The market ran their stops, right? They came up here because they're eager to go short. That they're so eager to go short, they're ignoring the long, like the true move long, which is basically the me yesterday. I was so eager to go long, I was ignoring the fact that the market was dumping 1,000 points. But we traded down into 950, yet another macro, right? Like this is what you want to see. Not only do we trade down into 150, right? There's a little thing called a fair value gap, right? And a lot of times you want to see like that first fair value gap, right? Like you see a gap in price here, but that's not a fair value gap because there's no wick right there, right? But let me show you where a fair value gap is though, right? Whenever you see this first 1 minute fair value gap, right? This is usually a really good place for price to, say hello, right? The market rallies up from 930, creates that first fair value gap off the 1 minute. Again, this is not a gap here. There's no wick, not really a gap here. I mean, it's barely a gap, but I guess you could call this a gap too. Let me see what we do inside of this. Nah, I like this one better. Anyway, but this right here was the perfect gap right here, in my opinion, because it brought us down into the fair value gap. And if you're using fair value gaps properly, you should be using them for retracements, right? Retracements into time at a key level, right? Where we're already starting to mitigate this level, right? Come back down into this level, trade down into 950, you could take the market long right there, right? Market trades back up on the other side of 1010, gets above that high, indicating we want to trade higher, trade back into that high, right? At 1015, and then we continue to push. And I kept saying this, I was like, this looks like a good area to short, but I'm not seeing a reason to get short, right? Like the market was doing this thing where it would push down. People mistake this for a change of character. It's not, right? If the market is not breaking the swing low, i.e. this low down here, it's not changing character, right? Like the more it puts in more swings, it's not changing character, right? So then we finally get above the previous day high right here. We got to come back down and retest it, break and retest above the 1 hour resistance. And anytime you see me write a plan that has like a 1 hour resistance or support or whatever it is, whatever I say to do, I'm looking to do bearish, you can basically use this same area to do the opposite. Once it breaks, it would be a break and retest to go bullish. You can see the market doing that, lining up with time and price, but we'll get there in a second. And then, I walked away at 11. So I was done doing homework and doing all my thing by 11. So shortly after that, we got that rally. And what I like to see out of this rally is for price to come up here at 1230. I can almost like blindly short this at 1230 if we do something like this. Like whenever I see this aggressively push up, I know 1230 is usually the sweet spot, right? And you can tell right at, what was it, 1228? That was the high point of this candle right there. But if you're being, patient, you could just follow structure, right? Like you could, wait for the break of structure, right? This was the low that brought this high. This was the swing that brought this high, right? So if we know structure to go previous high, previous low is where we're looking to trade, right? Look at that, right on the freaking nose at 50%. Right after it closed below this structure, it came back up and retested, tapped it at 50% at what time? 110. You look for 110 to bring the high, and you're looking to trade it down to 130 or previous day high, which again, if you pulled up my pre-market plan, I literally said, I'm either looking to go short at the blue box, or short at the orange box, essentially. And what are my targets from the orange box? I even said this in the pre-market prep today. I said, I'm only looking for the previous day high if I do take this short. Because if we come all the way up here, I don't think it's to go lower, at least not today, right? We could, but I don't think so. So pre-market, you would have got short inside of the end wall, target the previous day high, easy money. We double bottom off of that. And then you got a nice long off that same level, targeting where price just came from, right at the 39,354 level. So now essentially we create a new dealing range from this high to this low. And now we're just trading inside of that dealing range. What it yields, we'll find out either later today or tomorrow or tonight during the Asia and London session. So again, pretty simple, straightforward price action today, in my opinion, especially for the Dow Jones. Let's move over to the S&P 500 and the NASDAQ. We'll start with the NASDAQ because I know a lot of people trade that joint, and it was. I don't think it was the leader. I think S&P was the leader, but it wasn't far behind. Well, not in the least bit. But again, we got that same setup, and the only difference here on the NASDAQ and the ES is the daily fib played a major role, right? I didn't write a plan for these, but I have the same charting, right? The daily fib played a major role at 0.8, and Pippi brought this to my attention because we were talking and I asked him where he got long. He got long off this 8 o'clock candle. Now I wouldn't take this trade just because I like to wait for 8 o'clock to print, but I could see the reason why he took it. I mean, it was a beautiful setup right off the daily fib, traded down into it right off this bull flag, right? 18.04250. I mean, just beautiful. And then get a aggressive push. And then this fake out candle, right? Like this 9:30 candle fake out. We come to the 1 minute. You got to come down to the 1 minute to really respect, like the diabolical nature of the market, right? So we come over here. And again, I've seen worse fake outs. I'm not saying like this is the worst one I've seen, but we come up here, right? And you have this level right here, right? This is where you want to take the market short. This is a good area to take the market short. Now, me personally, the one thing that I said was I'm going to wait until we get a break of structure and failure, right? We did close below this low. This is the last low in the sequence, but it's coming from these lows down here at 750. So everything in here, although it looks bearish, this is actually very bullish. So you can absolutely short this for scalp, right? Or, you can just decide to long it. I think Valdez tried to short it. He got stopped out in profit. Then he took it again. He's like, nah, I'm just wrong. And he quickly flipped, which is something I didn't do yesterday. He quickly flipped and went bullish, ended up catching a killer trade back to the upside, right? So it's okay to be incorrect, right? You just don't want to stay incorrect all day, because if you do, you'll be fighting this uptrend all day long, right? But looking at time, 950, traded down into 950, traded back up on the other side of 1010, got our little consolidation, right? And then at 1050, we traded down again into 1050, right on the money. Right at 1051, we traded back up, traded down again inside of 1150, right? You guys know how much I love this 1230 joint. Let's see where we at. All the way up here to 1230, boom. High of the PM session, traded down, or just wait for us to trade up inside of 110. We trade up inside of 110. And now it's just up for the market to potentially get back above 110 price. If we don't get back above 110 price, that usually means that we're about to start descending back to the downside. So going into tomorrow, if the market can't get back above this PM session high right here, we're just going to start trending back down the other way, essentially just staying in a range. So we'll see how they finish, because there are Tesla earnings today, I believe, in the after hour session. So when Tesla reports, it may actually send the market back above the PM session high right here. So if that happens, then we'll see what happens, right? So but moving on to the S&P 500, again, same thesis on the S&P 500. I'm not going to go over it too in depth, because again, we basically did the exact same thing on the S&P 500. We had the daily fib right here. We got above our chessboard. We had our tight consolidation at the high of the chessboard right over here. We got above it, traded back down, barely into it, and then aggressively pushed up. Put that higher low in, and again, right at 1230, nice little doji candle, straight down from there, and then you could have loaned it right back up. But now we're kind of on the sell side. But like I said, earnings is coming up here in a little bit, so expect some fireworks. So how we're closing right now may not be how we close for the day, right? For the daily candle, right? And then what gave me the confidence to look for the longs instead of the shorts? It was the volatility index, right? We look at the volatility index. We got our weekly fib right here. We were up at these highs. We closed this gap yesterday, got about halfway into it. And then it was time for the VIX to continue. I wouldn't necessarily call this a downtrend. I just say we're consolidating inside of a range, right? So if you look at it, and shout out to J-Rock, he was like, you know, we're in a range. You can see the same thing inside of the VIX. The VIX is in this range. So as long as it's in this range, as soon as we come up to the highs, I'm looking to get short. We go to the lows, I'm looking to get long. Vice versa on the indices, right? If we go to the highs, I'm looking to get short. We go to the lows, I'm looking to get long. It's the same thing over and over and over again. But what gave me the confidence was the VIX wasn't pumping, right? In order for the market to dump or come down, the VIX needs to go up, not down, right? And you can see over here on the 1 hour, all the VIX did was just kind of creepy crawl its way down, right? Not back to the upside, which is telling me there still could be some buyers of the VIX, but I think everybody's kind of waiting on Tesla to report. I think Google reports this week, all that good stuff. So that being said, we end the week Friday with consumer sentiment. I'm kind of going over some of those things that I know we didn't cover them in my top-down analysis that I didn't do this week. So, but there are some huge catalysts to end the week, consumer sentiment. So just remember, as bullish as April may look, zoom out and you'll see that the month is still very much bearish. So my thoughts moving forward, again, we'll continue to play the trend until the trend breaks, but I think there's still more downside, more pain to come. I just think this is more of a dead cat bounce for April. I think they really start bringing the hammer in May, but we'll see what happens. That's my long-term thesis. That being said, my name is T Hobbs. This is the Trader Shop, and I'll catch you guys on the next one, man. Peace.